Hey guys, John Polemy here, Actionable Intelligence. Today is Saturday, December 20th. This is the weekly market update. The disclaimer, anything that you hear or see on this podcast or video is not to be taken as investment advice. I am not a registered financial advisor and I cannot give you individual financial advice. Please do your own due diligence. It's your money. It's your responsibility. Okay, so this will probably be the last video show for 2025. Obviously, Christmas is next week. Then we get into the new year. I don't know what I'll do uh, the weekend after Christmas. I'm not sure yet. Uh, or the first week of January. It just depends where I'm at, what I'm doing, what's going on. So I'll be doing some traveling, but really positive going into 2026 in my view. I think you're going to notice that in some of the charts that we go over in this week market update. Also, just we are ahead of a lot of these themes, and I will be going more in depth into what's happening, what I think is going to happen, the asset shifting that I think is going to happen towards commodities, because the charts are just unambiguous at this point. We just have multiple breakouts, multiple moves higher across the commodity sphere, especially recently. So something's happening. So I'll be getting into that in the January 2026 issue of the Actionable Intelligence Report, where I'll go over, my forecast, which is worth what everybody's forecast is worth, but trying to identify some of the other sectors or commodities or resources or areas that are undervalued, where I am looking currently for returns going forward. Uh, Goes without saying, the U.S. market is still not one of my favorites. But regardless, if you're interested in understanding that, then the commentary section is usually a lot of the commentary section I put in the Actionable Intelligence Alert paid version is usually free. And then when I get into talking about individual names or how to take advantage of these themes, that's when it gets into the paid version. So I think a lot of the forecasting and review will be free, as a lot of it is. And then I usually put the good stuff, the secret sauce behind the paywall. So if you're interested in that, just be on the lookout for that first week of January, so to speak. All right, let's get into it. So gold stocks, we all know this. I just like these charts. This is from a Goring and Rosenzweig presentation, but it just shows you how much the GDX, just a gold stock ETF, has outperformed the S&P 500, and of course, just crushed the XLE, which is the energy ETF. Um, So this has been tremendous for us in the portfolio. Individually, I know a lot of listeners have been in the precious metals. Will it continue? Well, if the underlying conditions that are pushing gold and silver higher continue, then likely that would happen. I mean, we're just not, we had that pullback a couple months ago. We kind of trimmed some positions, took a lot of flack for that. We're able to re-enter positions at a lower level. I think you have to kind of do that in this bull market because the precious metals are so volatile. When you get a lot of public interest and you get an overbought sentiment, it does make sense to trim. It doesn't mean you sell everything and call a bear market. It means trimming and then waiting for the inevitable pullback, retrenchment before the next leg higher. Then you can buy even more precious metal stocks at a lower price. So, uh, but I'm talking about extremes. I'm not trying to get too cute with this. When it gets extreme, sentiment overbought, that's when I look to trim. Otherwise, you just ride this thing out. But a couple months ago, when we said to trim and we thought things were overbought, took a lot of incoming flack. And of course, that's what happened. Things pulled back. We were able to re-enter the market, picked up a couple of interesting names, which were mentioned in the AIA Discord channel, which is a benefit you get when you subscribe. But yeah, so that's how I think these things should be played. Now, something going up multi years in a row usually is not a good thing. if you go to like US global investors, they will put up this periodic chart of elements, if you will, and the returns for different commodities. And it goes back like 10 or 15 years. And you will note that not in every case, but in a lot of cases, a resource or a commodity or something that outperforms for a year or two has a tendency to have a big pullback then. And this is just inevitable because of the supply demand response. Uh, High prices cure high prices, low prices cure low prices. Uh, Conversely, things that underperform, if you look at that periodic chart for a year or two or three, sometimes you will note that all of a sudden they will outperform. Same thing. So that's an interesting exercise to look at that. It's not 100%, but it gives you an idea of how this really works. These things kind of go in cycles. So just extrapolating current returns or past returns indefinitely into the future in resource stocks or sectors is not a good thing. You have to be on your toes. You have to understand the cycle. You have to understand what is driving these prices higher. Or in the case of energy, why is it, been in a 3-year bear market, basically? You have to understand that because it won't stay in a bear market forever. So this is also from I'll put a link to the article. It's an excerpt from, I think, the previous quarterly discussion or commentary that Gordon and Rosenzweig put out. But gold leads, oil follows. And we've seen this before. So this is an excerpt. I will put a link to the article. You can read it yourself. In the early 2000s, long before commodities became fashionable dinner table conversation, a similar baton pass occurred. Gold led the resource market from 1999 through 2003. Then, abruptly and emphatically, oil took over. From 2004 through 2008, crude became the market's leader, and investors who increased their energy exposure were rewarded many multiples over. We believe the same forces are gathering today. Gold continues to enjoy a powerful long-term setup, and we remain enthusiastic owners. The balance of opportunity, in our view, is beginning to tilt. That is not a call to abandon gold. It is a call to raise one's exposure to oil. That's like the best paragraph that sums up my view on it also. Not abandoning gold, not throwing gold over the side. Uh, Gold can probably move higher, but oil is really where the opportunity is. I mean, look at the underperformance. It's just been basically doing nothing for 3 years. That's, again, probably will change at some point. Now, the problem is I'm always early on these things, okay? But as I've said many times, as I've discussed why I'm interested in oil, I'm not out there buying junior oil companies drilling, doing wildcat drilling. We're talking about buying crown jewels, okay? The best of the best when they're historically cheap. And the thing that a lot of people ignore is that in a lot of cases, many of these companies over the last couple of years have not been making huge capital investments. Yes, they need to make ongoing maintenance capital. They need to do a certain amount of drilling to maintain production, but they're not going out and spending billions of dollars on big projects. And so they have been enjoying, especially in Canada, in the oil sands, which I have great affinity for. That's what I consider crown jewels, many of these companies. Uh, what have they been doing with their excess cash flow? Well, they've been paying down debt. We like that as a Walter Kloss acolyte. What else have they been doing? Well, they've been paying dividends and increasing them, and they've been buying back shares. This is what we like. And this is in a so-called low price environment. So this is where I think the opportunity is right now. And if I can buy these things with decades of reserves at cheap prices, I mean, I don't think I can lose. That's been in a 3-year bear market for a commodity that is arguably the most important commodity for mankind's modern life. Without oil, you wouldn't exist. And so I like it when I see this level of bearishness. Everybody's bearish, everybody's short, everybody has a reason why oil's going to 30 or 40. And I'm not saying it wouldn't go there. Okay. But I have a contrary view on the world economy. I look at PMIs monthly. Go on S&P, they have a whole thing about PMIs. Just put S&P PMIs And you can look at the Purchasing Managers Index for various countries and regions around the world. Okay, so when we have this um, over 2 years now of most central banks around the world cutting rates, I just don't see this global recession we're going to have. Are there individual problems in individual countries? Yes, but that doesn't mean, I mean, pushing back against that level of liquidity uh, is I don't think a good idea. So, anyways, that's my view. Expand upon that in the January 2026 issue of the Actionable Intelligence Alert newsletter. So I just wanted to show this, again, looking at setups, looking at history. It doesn't always repeat. Again, going back to the lesson of playing poker and reading, poker books. You can get a certain hand like dealt, like in Hold'em, if you get two aces dealt to you and you play it correctly over 1,000 hands, you will more than likely be profitable. You will be. The data shows that you will have a certain profit potential. You'll win more of the hands than you'll lose. But that doesn't mean that on any individual hand that you won't get a bad beat. Okay, this happens. So looking at history, looking at patterns, and this is how it kind of translates that kind of thinking that I try to use. When I see data like this, okay, well, percent of stocks with price to sales above 10 times is at an extreme, even after adjusting for a select number of mega caps. Well, what happened in the past when this happened? This isn't a frequent event, okay? At least on these charts going back to 1965. This is not something that happens all the time. When it does happen, well, when's the last time it happened? Well, right before the tech bust in, the late 90s, early 2000s. You saw what happened there. Does that mean we're going to have another tech bust? The future's unknowable. What are the odds are that we are overvalued? Why do I want to put capital into a market that's overvalued historically and knowing what happened last time? I don't need to do that. There's plenty of opportunities around the world that aren't in this situation that are actually undervalued, that actually pay me a high dividend yield, that actually have, I can make arguments for why they are going to mean revert. So I don't need to do this. I don't need to put my money. But the problem is there's so many millions of passive investors in the US via IRAs, 401ks, all this pension funds, and this is what they're invested in, and they don't even know it. They're in the Fidelity Target 2045 fund, 60/40, and of course, all of these things own the same market weighted stocks in the S&P, which are the tech stocks. And so, this is how people can get themselves in trouble. So again, this is not where I really want to put my money when I see these kind of setups. This is unambiguous. I don't, of course it could go higher, but you know, really, what's what are the odds? That's the question. So let's get into some of the things that are happening. Lithium looks like it might be one of the things that's going to move higher in 2026. I'm going to be showing some 5-year charts just because it gives you better context. It looks like, we had this tremendous move in lithium a few years ago that it crashed. But I do have to give credit to the fact that battery technology and storage, this is increasing around the world, and there is a demand for this product. It's been oversold, and we'll see what happens. But it looks like it's trying to make a bottom, and it could move higher. A lot of the lithium stocks are already moving, and a lot of FinTwit people are starting to rotate into this. I mean, it's really interesting looking at the sentiment indicators on some of these sectors when you go on like Twitter or X, whatever you want to call it. And a lot of people, you can just go on there and look and see what's in favor and what's not in favor. And then kind of drives you to, okay, well, people are talking up lithium. What's going on? Okay, well, here's the chart. Well, this is interesting. Looks like it might be trying to break higher. Here's tin, something else that we've talked about. This is kind of, you're kind of limited in how to participate in this, but again, another commodity that has demand uh, far exceeding supply, and obviously the price moves higher. I mean, there's two main stocks really that people are in when you talk about this, Alpha Min or Metals X. But there's also some other ones that are starting to surface that are off the radar screen. But this is interesting. And what I think you're starting to notice over the last several weeks is we're showing more and more variety. It's not just like gold and silver moving higher. It's not just copper. All these other things are starting to move higher. What is this telling you? Is this telling you that there's going to be a crash in the world economy? I mean, I don't see it. Okay. I don't see problem in the world economy until energy prices move up. Okay. With rates coming down around the world, what, you know, with low energy prices being a tremendous catalyst for the world economy because energy is such an input. I don't see any problem in the world economy until that. Yes, I can say, okay, well, there's a property issue still in China. There's an unemployment and affordability thing, but a lot of this stuff is, you know, starting to solve itself. Okay, so and how much of a forecast? I guess this one of the things I've learned and finally resolved is that the average person trying to forecast the economy is a mug's game. Price is dictating things. Okay, the when I see across the entire resource sector, commodity and resources breaking out all over the place, what is that telling me? Okay, what am I absorbing? Who's that doesn't happen in an environment where economic growth is going to be horrible. Not to say that, yes, if you look at PMIs, you know, certain countries, even like in the UK or France, their PMIs are above 50. Okay. So there's opportunity and looking at things in totality, but trying to forecast like individual countries. Well, the US is going to go into a recession, so oil's going to go down. China has a property bubble, but yet they had $1 trillion uh, you know, uh, surplus in exports. I mean, you can make the argument, you can grab data points, and this is what I'm looking at is what's really happening in these sectors. A lot of this is to do, as I've said, what I think the super cycle, a lot of it's going to be about is not necessarily demand. Demand will increase, obviously, but it won't be like the last commodity super cycle when China was just a black hole. This is going to be because of underinvestment. We simply, as a world, have not reinvested in these extractive industries. So the price now is moving higher. So 2026 is shaping up to be a base and industrial metals year. You look at copper stocks; these are stock indexes. Copper stocks breaking out, steel stocks breaking out, aluminum, even aluminum stocks look like they're breaking out. What is this telling you? Okay. Now I'm not suggesting you buy these, but something's happening here. Okay. And I don't think the consensus view is that is where you know, this is where money is. Everybody's still talking up the AI thing, still on the boom, like the original chart we showed at the beginning of this presentation. And smart money's moving in here, and the breakouts are obvious. I mean, if you look at copper and steel, these are classic multi-year sideways moves, then a break to higher. That's usually going to continue. Okay. What are the odds? Go research this. Okay. What typically happens when this phenom when you see a chart? The charts are almost identical. And the aluminum's a little bit more busy, but it's moving higher. So what's that telling you? And so again, I talk about a commodity super cycle. I showed you charts over the last few weeks. Things are breaking out: copper, platinum, palladium, gold, silver, tin, uh, across the aluminum, all this stuff. Okay, so this all going to happen, and then crude just going to go to 30 or $40 a barrel? Not likely, in my view. I thought this was an interesting chart. I had an interview this week with the Royalty King, and he was talking about, we were just mentioned talking about this whole Brent, the oil gold ratio and if it's useful or not useful. And um, I just happened upon this chart like a day later. And again, history doesn't always repeat exactly, but something, when you get to extremes on this gold oil ratio, look what has happened in the past. Just about in every single case, you've had to move higher in the oil price. I simply do not think, now I don't know what the catalyst is going to be. Again, I'm always early. I was early buying gold. I was early buying platinum. If you remember, a couple of years ago, I was telling people to buy platinum is undervalued. It was under $1,000 an ounce. Remember? And I was accumulating, a little bit here, a little bit there, a little bit here, a little bit there, not buying the platinum stocks necessarily. A lot of people were on FinTwit. Let's buy, SBSW. That's done very well. I do have a stock that I think is going to do very well in the platinum group metals going forward. But I've moved into that now. But sometimes you just have to accumulate these things when you have the opportunity. Continue to rotate money in, make profits in other sectors that have done well, rotate into something like this. And you can see this is like a tremendous chart going back to 1980. When you get to extremes, again, a lot of times these things are not useful, these ratios, except at the extremes. And I think it's interesting to at least consider this when you're, placing bets, if you will. It's the same thing. If you're dealt, certain hands, you don't play them. If you're dealt certain hands, you play strongly because the odds are in your favor. Same thing if you're counting cards in blackjack. Once the count goes in your favor, you up your bets. This is why the casino will throw you out. But here we don't, and so when things look the worst and everybody has a reason why things are going to get worse in a particular sector like crude oil, um, you know, then again, when everybody's on one side of the canoe. Now, that doesn't mean it can't go into the 50s or 60s or 50s or 40s. I have no idea what the future holds, but I just don't think that's something that's been in a bear market for 3 years and everybody's on one side of the trade uh, isn't going to reverse at some point and mean revert. And if I can buy crown jewels in the industry, which I can very cheaply, then why wouldn't I do that? Again, speculative short interest in Brent crude hits all-time high. So this goes only back to 2011. But look, everybody's short. If everybody's sold and everybody's short, what does that tell you? I remember like when gold was like in the like late 90s, early 2000s when gold was like 275, something like that, 280, 290. And the Bank of England was selling its gold because, it's a doorstop, it has no value. We use treasury securities as our reserve asset, yada, yada, yada. Nobody could see any reason why gold would move higher. The producers were forward selling their gold, putting even more pressure. And, then the thing it reverses. Okay. And you go on a tremendous bull market that's lasted for basically 25 years. Okay. Uh, Notwithstanding various times of pullbacks. And, if you look at the chart from 2000 to 2025, it basically goes from the lower left to the upper right. Am I suggesting the same thing is going to happen in crude oil? No. But what I'm suggesting is when everybody has a reason, or something, it's the same thing in platinum group metals. EVs, are the future. Bloomberg charts and all these people coming out with their charts, analysts, we kind of fell into that trap a little bit too, right? Extrapolating EV growth indefinitely, 10, 10% compound annual growth rate indefinitely into the future. And what would this mean for, the internal combustion engine? And why would you need platinum and palladium and rhodium and these things anymore? Because the ICE is going away. Well, that's all kind of reversed now. The big growth area is actually hybrids, uh, and they require even more PGMs because of the internal combustion component of the hybrid. Okay, so you know, again, you can never know the future fully, and when things get, we kind of realized that wasn't the EV thing wasn't really going to work. Yes, EVs are out there; they're growing in some areas. They're not growing in other areas. I'm going to get into that in the clown world section of the video later, but when things are this skewed one way, I don't know, you kind of got to take the other side, don't you? And kind of got to do it with the experience of decades of doing this and saying, look, when things get to this extreme and everybody's on one side of the canoe, I need to move to the other side of the canoe. Okay, because this thing's going to roll over. I mean, most of the time, I have to admit, in a large proportion of the time, and maybe in most cases, the market's typically right. It does price things correctly. But when it gets to extremes, this is what I'm telling you. When you get to extremes is when the market has a tendency to be wrong, when market participant and when it pays to be a contrarian. And this is like an extreme record short interest. Everybody's bearish. You can make the case, I can make the case. Okay, the Don Road Doctrine's in effect if they overthrow the Maduro government and get in some U.S. puppet government in Venezuela, and Chevron and everybody can flood in there and throw capital at it. Yes, they could get production very quickly up to 1 million, 2 million barrels a day. Okay, you can make that case. But you could also make the case that, geologically, what has happened to the shale oil basins? Well, we know the Eagle Ford's in decline, the Bakken's in decline, and depending on how you look at the Permian, opinions vary, obviously. So you're pinning all your hopes on a few counties in West Texas and New Mexico. So where else is all this? You could say, well, Guyana. Okay, well, Guyana is, has been a success story. Exxon's done tremendously well there. 0 to 1 million barrels a day in probably 10 years. That's in the context of a 105 million barrel day demand scenario with 6 to 7% decline rates worldwide and 1% to 1.5% growth rates in demand. Okay, so supply is, because it's an extractive industry, and the haven't been kept up. So, this idea that, well, we're going to have a 4 million barrel a day surplus next year, the forward spreads don't show that. That would be like pandemic levels of 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 demand or supply demand imbalance. It's not happening. Oil would already be at like $30 a barrel if that was accurate. And so I don't think people really know for certain. I know I don't know as a generalist. I don't have 100% certainty what's going on in the Permian, and I don't have 100% certainty what's going on in OPEC. But I suggest to you that when things get this extreme, I don't need to be an expert because mean reversion probably will work in my favor. So here's Permian oil production. This is off Twitter, obviously. Permian tight oil production is now in decline. You get a lower rig count, obviously, because the price has dropped, and so you know, this activity is a function of price to a certain extent, which results in less wells completed and declining oil production. This is important, I think, right here. Year-over-year change in Permian oil production, 3-month moving average. You're actually in decline now. So again, as I've stated in the past, if oil were to go to 80, 90, $100 a barrel and stay there, would we see activity increase? Likely. It would improve the economics of certain areas and people would come back and drill. But would it be sufficient? I don't know how much so this is kind of the balancing act we're in. I'm still seeing hesitancy. There's other big areas offshore to drill in. Petrobras had tremendous success in the last couple of years. Uh, Offshore Brazil, obviously the success in Guyana. There's a lot of interest in Namibia, but people are kind of holding back. Nobody's like rushing out there at $60 oil to drill to spend billions of dollars. They're kind of keep pushing out. And you've seen that like with the offshore drillers. They've talked a lot about how their customers are kind of pushing some of these decisions out further because of price. And at some point in an extractive industry, if you don't replace the reserves that you've produced, it's a problem. This is another reason why I like the oil sands. The investments have already been made. Now you just need to do the maintenance capital and just print money. It's a manufacturing uh, process at this point. Nobody's up there saying we're going to spend $20 billion building this new oil sands facility. That would be crazy at $60 a barrel. Just minting money right now, making slight adjustments, process improvements here and there, maintaining the production. So, and that's, they become basically cash flow machines. That's appropriate, I think, at this turning point if in fact the oil price moves higher, like I think it will over the next couple years, then you can start transitioning into more speculative areas. But even in areas like offshore, I own a company in the dividend portfolio that owns high spec rigs in an area right now. And their rigs are sold out for into 2027, and they're paying down they paid down debt and they're increasing their dividend. This is what I like in the dividend portfolio. And the stock has moved higher as people have realized this. And this is the context of a market that's where day rates really are kind of stagnant right now as we wait for final investment decisions by the IOCs, which I think will happen at a higher oil price. Okay. Global coal demand rose to an all-time high in 2025. I think this is interesting. This is the IAA is always wrong. These are its previous predictions. You know, they thought coal was going to roll over, yet coal continues to grow. Now it grew at 0.5% last year. I think it was no, close to 9 billion metric tons. I mean, if you go to China, if you go to India, if you go to places like Indonesia, coal is a primary uh, fuel for electricity generation. Why? Because it's relatively cheap. It can be moved and stored easily. Coal plants are not that hard to build and run. So, why not? Now, you notice that, like, with specifically to China and India, they don't want to like burn all this coal. They realize the environmental issues for the people, but they need so much electricity that they have no choice right now. Is nuclear power, though, moving faster in these places? Yes. Okay. They need everything. Like China has an all power uh, mandate, whether it's renewables, coal, hydropower, nuclear, what have you, okay? Because it doesn't want to wet itself and be an ideologue and just say we're only going to have one source of power. That's crazy. That's what the US did with renewables over the last 10, 15 years. And you see that we are rapidly behind now. We're having higher electricity costs. And in the so-called AI race, it's no longer about chips in my view. It's about who has the cheapest energy is going to win. I can tell you right now that, and I've said this before, this is going to become a political issue in some states in the next election cycle because electricity costs, in order to build, for example, in Texas, I read an article recently where in order to build the projected amount of AI infrastructure, what have you, I'm not saying it's going to happen. I don't think it will, but let's say you did, the electricity demand and the supply of electricity will not keep up, such that the price of electricity would rise by 2 or 3 times. The voting public will not stand for it. They will not stand for it. There will be tremendous um, uh, political backlash. Uh, you can build these chip farms or this AI infrastructure faster than you can build the power infrastructure. And notwithstanding the fact that we basically haven't done anything here for 30 or 40 years in this country and haven't had a focus on it, while these other countries like China, for example, are doing it. And so, or if you want to have a self-inflicted, if you want to go to the far extreme and do self-inflicted gunshot wounds like Europe, where you deliberately uh, kneecap yourself and push your power prices higher in a misguided attempt to deal with a trace element in the atmosphere, i.e., CO2, and somehow, you know, teach Russia a lesson based on its illegal invasion of Ukraine. In the meantime, you're getting poor and falling behind. So these other countries, this is why I focus on the emerging markets and the global south and east, because this is where the action is, this is where like rational people exist, not ideologues. And this is where the demand is. This is where the populations are growing in many cases, not all cases. And this is where the demand, this is where the people are entering the middle class. Their purchasing power is increasing. As that happens, obviously commodity and energy demand increase. So Palladium undercover bull market, been talking about that for a while. Johnson Matthey just admitted something that should have triggered emergency meetings across every trading desk on Earth. Palladium has run structural deficits for 13 consecutive years, not most years, every year since 2020, 2012. Yet managed money is sitting at record short positions. Well, this will reverse. At some point, you saw what happened in silver recently. I think a lot of that was uh, finally people that were shorting it, people that had a negative view on it, have reversed course. And this is what happens in these commodities. Nothing happens. For example, palladium was in a structural deficit for 13 years, and in the last several years, it's been in a downtrend. And people will email me, well, if you're saying that this XYZ commodity or resource is in a supply demand deficit, why isn't anything happening with the price? I don't know. This is what happens with these things, okay? They move sideways or they move down, even in the context of this, because people short these things. It's in a the price is down, and so the algorithm or the trading desks keep shorting it. It's free money, and then eventually the supply and demand becomes so overwhelming, the disconnect that the price moves higher, like what's happening now. Then all of a sudden, some trigger that we don't even know about, or sometimes we do know about, like for example in silver, industrial demand because of renewables and things like that, a large part of it. All of a sudden, it just decides to take off. Problem is, if you're not positioned in it, then you're not able to benefit. And so I think the lesson here is, okay, it's in a deficit for 13 years. You don't know when it's going to take off, but it's a metal. Okay. It's hard to extract from the earth. It's being extracted in two places on earth that are considered not stable, Russia and South Africa. And so you say, okay, well, if it gets this cheap relative to its history, maybe I should just buy some of the physical and accumulate it. I don't have to necessarily go out and buy the stocks if they're not making money and they're closing shafts down. That doesn't make sense. But I buy the metal. Then once I see the turn, like we see here on the chart, and it's kind of confirmed in my mind that this thing's in an uptrend, well, let the trend be your friend. Now it's time to gravitate to the stocks because they will be the beneficiary of these higher prices, whoever survived the downturn. That's when you want to look for the more leveraged names. Okay. Or, you can buy, you know, people have made a lot of money on SBSW because they decided to buy it at $4 a share couple, 18 months, 2 years ago. There were people on FinTwit talking about it. I didn't do it. I just kept buying the metals. I just didn't see the risk reward the same. Now, obviously, it's probably going to make a move far higher than just this little move here. When you see this rounding bottom, it's in a deficit. I mean, this is what I'm talking about. You have to kind of use some common sense here. Well, look at platinum. It's in the same. So first 2000 over $2,000 an ounce. So what I was talking about, it's doubled. I was telling everybody, just buy platinum coins. Just buy them. A little here, a little there. Not go all in. Just chip away, accumulate, let it sit. Same thing we did with gold and silver. I remember going every payday when I got out of the Navy and I got a real job, and I was just like, okay, well, I'll just go down to the local coin store and, haggle over the guy selling me silver rounds for, haggling. Well, he's offering me and I'm at 4.85 an ounce, $4.85 an ounce. And I think, well, I'll buy, 100 at $4.75. And we're sitting here spending 15 minutes arguing about it. Look at it, what it did now. It's tremendous, and you just sit on it. It just sits in a drawer or in a closet and you forget about it. You just nibble at it. Okay. And inevitably, these things have their day in the sun. Same thing here. I don't think, now this has been a big move ra really quickly. So could it pull back to 1,800 or 1,600? Yes, it could. Do I think it's going higher? Yes, I think it's going higher. Historically, as I've pointed out many times before, platinum has traded above the price of gold. Okay. And am I saying that's going to happen this time? I don't see any reason. I said this back when it was trading at 900. There's no reason why it couldn't trade, at $4,000 an ounce during this bull market it's in. Again, it's in structural deficit. The EV thing didn't really play out like everybody thought. oh, by the way, ICEs are not going away, and hybrids are a big growth industry, and they use more PGMs, platinum group metals, than a typical just ICE car. So the whole narrative has shifted, and now the price is blasting off. Nothing happens for years. Look at this chart, even though it's in deficit, and all of a sudden it decides to blast off. This is what happens in these markets. So I guess you could just wait. You can kind of put these charts and just review them monthly or something. And when they finally blast off, you can say, okay, now it's time to do that. That's a way to do it. I just prefer to say, okay, well, something's really cheap. I'm going to buy it. I'm going to hold it. You know, the same thing like fine wines. I invest in those, right? Investment grade wines. The market has been horrible for the last 3 years, but now it's starting to recover. So I was able to buy a lot of good bottles of investment grade wine. People were just giving them away or selling them because they threw up their hands. And I was able to pick up, I have been able to pick up, things on discount, buying things below market value. And now it looks like, well, the Asian buyer is returning. And so it looks like we may be recovering. So again, what you pay, price you pay is basically determines how much if you're going to be successful with an investment. If you buy things cheaply that have value, then I don't really think you can lose money. It's just that people don't have patience. They don't want to wait. I mean, do you want to be buying platinum back here, bouncing around 1,000 year after year after year? Nothing happens. This guy keeps talking about platinum. Why is he talking about it? Nothing ever happens, but you just nibble, 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 nibble. All of a sudden, you got a stack over here. Same thing with silver. Same thing with Bitcoin. Whatever people were talking about, you just nibble, 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 and all of a sudden for whatever reason you can't even put your finger on, it decides to react. And this is what happens. And then you get paid. So this is an article about copper's next shortage is structural, not hype. Copper's, well, I think it was $5.55 a pound last week, I think I saw. Copper is heading into a structural deficit from 2026 as demand from electrification accelerates faster than new supply, according to Bloomberg NEF, with geopolitical intervention now the single biggest force shaping metals markets. Supply constraints are already visible. Disruptions in Chile, Indonesia, and Peru, paired with slow permitting, have tightened the market. Bloomberg estimates the copper shortfall could reach 19 million tons by 2050 without new mines or significant gains in scrap collection. And this analyst at Bloomberg said the imbalance reflects rising demand colliding with slow project delivery. Quote, copper, platinum, and palladium have experienced very slow capacity addition at a time where demand is growing, calling them the commodities under the greatest near-term pressure. Yeah, I don't disagree with that. Again, though, we have to be wary of, saying that things are just going to extrapolate out into the future. Eventually, if the price goes high enough, I can pretty much guarantee you enough capital will come into a particular market to resolve. Uh, you know, what happens is these prices move higher. The few survivors or producers that survived the previous down cycle are just making tremendous uh, excess profits, and capital is attracted to these excess profits. For example, I think I read an article last week um, that uh, what was it? Anglico, Agnico Eagle, for example, made like $1 billion last quarter. They're basically at these current gold prices, basically making $12 million per day. This is unbelievable, right? With this kind of money being earned, obviously, with prices so high in gold, it's going to attract people to develop marginal mines, bring projects, recycle projects that were out there, go look for new projects. This is what happens, right? Inevitably, enough capital will be attracted to the market to that particular sector to because it wants to enjoy those profits. Also, the problem is it's everybody runs towards it, okay? And eventually, this is what the whole thing about high prices curing high prices. So something to keep an eye on. Um, I think we've done well with copper. We have an interesting copper play and PGM play in the portfolio. We also have a interesting copper play in the dividend portfolio, which just paid its second special dividend this year. It's not necessarily a miner, it's more of a manufacturing situation where it recycles tailings from major mines that have decades of reserves. And so when the copper price moves up, they benefit, right? Their margins expand. They just keep doing what they're doing. They have no debt, and excess cash flow comes in, so they pay special dividends. So that's worked out well too. That stock price has moved up as those returns to shareholders has moved up, and that's in the dividend portfolio. If copper continues to move higher, I expect that that will continue. And so uh, again, we don't know exactly what's going to happen in the future, but again, looking at all these charts I've been showing you over the last couple of weeks, obviously something's happening across this entire commodity resource sector. So this is interesting. This is from Bloomberg. This is the U.S. will spend more than 350 billion on nuclear power through 2050. At least it's something. We're starting to see a revival. We're not going to actually see beginning construction, I don't think, the new reactors till at least 2030. That's projection you can see here. So there's a lot of engineering work going on, preparation. Um, we've reported on that, the 10 reactors, and again, this could be 3.5 trillion on nuclear power. This should be our main focus, industrial policy for the United States. Build 100, 200, 300, 1,000 megawatt reactors, and we would dominate. Energy would be so cheap and so reliable, we would dominate. Okay. People really take for granted how much spillover effect we would have, and the apprenticeships, trades, the engineering talent, the STEM, the operations personnel. These are all high paid jobs. Okay. Make sure that if you're going to have this partnership, which I think we should with the government and industry, you have to build this stuff in the US. It would take time to ramp up that infrastructure, but make that commitment. This is what we're going to have this focus. We're not going to get distracted with renewables and nonsense. This is heavy industry. This is what we do. We're going to build this. We're going to partner and reduce the paperwork and regulatory burden to make it efficient. Doesn't mean we cut regulations on safety or stuff like that, but we lower the burden so that these things can move through. And we bring the full force of the federal government to nonsensical radicals that try to stop these things with lawsuits. Okay. And we say, what if we would have spent $20 trillion on our infrastructure instead of throwing it away in Iraq and Afghanistan? Where would this economy be right now? You see, this is what really America First is about. This is what I advocate. 350 billion is nothing. It should be 3.5 trillion. And the president should be out there every day talking about it. Should make this the focus. But, I'm not in the administration. That's what I would be doing. But anyway, it's a different kind of it's easier said than done because there's so many factions and so many people feeding at the trough, that so many special interests, that it's kind of difficult to do some of these things, I think. So any progress is at least some progress. So I want to talk about a couple clown world things, which I think are interesting. This first one is the um, last week Ford Motor Company is writing down $19.5 billion in electric vehicle investments. Ford also says it will stop producing the electric version of the F-150. Yeah, because nobody wants these things. Subsidies are gone away. So you have see, this is the problem with these big companies that you have to be aware of. They're all tied into the whole, you know, establishment thinking, okay? In order to get to the highest levels in these companies, because the board, you got Vanguard owns a lot of the shares, BlackRock. Larry Fink was a big CO2 guy until he wasn't. And oh, we can vote all these shares, so the board needs to have a focus on EVs to appease the big shareholders at BlackRock and Vanguard who are tied into the apparatchiks in government and the whole media university complex, what I call the establishment, the blob, was all about EVs. And so they took this company and went full bore. And now the losses, and it's not just writing down 19.5. If you look at even the losses in totality, it's something like $30 billion. And so I put here is why is Jim Farley, who's the CEO of Ford Motor Company, why does this clown still have a job? Uh, and I just have some stats here. It's interesting. I don't blame him. He's a true believer. He's going to do what he's going to do to get paid, right? Board says they want to go into EVs. Okay, we'll go into EVs, and I'll go out there and tout it. Okay, but why wouldn't he? Because last year, for example, he received total compensation of $24.8 million. Okay, this was a decrease from 26.4 million in 2023. So uh, this clown college over at Ford Motor Company that's running the company, this guy who's the CEO, the head guy, the Midnight Day Man, has been paid $50 million in compensation the last 2 years, and the net result is $30 billion in losses. And yet he's still the CEO. Probably not for much longer, but he is. And so here's the breakdown. The base salary is 1.7 million. Bonus incentive compensation, 1.6 million. That's down 33% from 2023. Stock awards, 20.6 million. Okay, so you know, this has got to change. I can see paying the guy $1 million a year to run the Ford Motor Company, but $20 million in stock options? What did he do for $50 million? He ran the company into the ground. Made a bad bet. He got to go. The whole board's got to go. The whole thing needs to be replaced. And of course, EVs now are not the big story anymore, are they? It's not the zeitgeist. It's not going to change the world. They're not going to go away. Some places they're doing very well, but not in the US. People don't want them here. Okay? People don't want these cars. We have a car culture, and they haven't solved the range issue and the price issue. This is what Ford did well was make very large SUVs for families, okay? And the F-150 pickup, which was the best-selling pickup. Internally combustion engines. That's what they should focus on. Well, that seems like they're going to turn back to, okay, because this didn't work. I remember they were making all these electric Mustangs. Remember, those things didn't even sell. They were like Edsels. So it's important, I think, to really focus on what these people say and do, okay, and whether something's investable. You can make a good case for or against, if the consensus is wrong. And my thoughts on when I said about renewables and EVs, these things only existed because of subsidies. Once the subsidies went away in the US, for the most part, these things got hamstrung. These things didn't sell. Nobody wanted them. All right. So we'll see if that changes. We'll now have to see what GM's going to do because, you know, see if what their losses are, if they're going to continue to make EVs. We'll see. So this is interesting. I just put this up here because I'm from Minnesota. I spent a lot of time in Minnesota. I used to live in Minnesota, and we kind of knew most people, unless they were asleep, kind of knew this. You know, this is CBS News. Finally, I guess, woke up or became politically permissible by the blob apparatchiks to allow this actual reporting to happen because it got so egregious. It says Minnesota has become a magnet for fraud, so much so that we have developed a fraud tourism industry. People coming to our state purely to exploit and defraud its programs, Thompson said. This is a deeply unsettling reality that all Minnesotans should understand. And most of it is in the Somali immigrant population. The U.S. attorney, okay, because the U.S. attorney had to get involved because Keith Ellison isn't going to do anything about it. It's now coming out that Waltz, the governor, who was almost your vice president, by the way, and Keith Ellison, they had people in the Health and Human Services Department there that had a Twitter account for years telling people, telling the state, telling Waltz, telling Ellison, telling anybody that would listen that there was fraud going on. The autism centers, Meals on Wheels, daycare, any kind of scam that these Somalis could come up with. A pirate culture, low IQ, low trust society, imported by the tens of thousands into Minnesota. And now we have what they think might be $19 billion in fraud over the last years. So much so that the U.S. attorney, assistant U.S. attorney, is investigating all this. They've already had one recent trial. I think it was like 50, 60 people were indicted. Okay. The most of them Somalis. Okay. So I'm not going to comment from this is a clown world all the way. If you lived up there, if you know, you know. If you lived up there, if you're from there, you know. Okay. And if you don't know, you're in denial. These people, the GDP, I'll just tell one anecdote. The GDP of Somalia is like 10 billion. These people stole the equivalent of 2 years of Somali GDP, the country of Somalia. There was one anecdote when one clown, Somali clown, was a stole, I don't know, $20 million. They have video of him because these people are unashamed in Somalia with guys around him with AKs because, instant warlord, just add Minnesota taxpayer funds. He went back to Somalia and is trying to become a warlord. We have other people that are buying all kinds of property in Kenya and all kind. I mean, it's obvious what was going on. Uh, the state government didn't do anything. Why? Because DFL politics. That's how all politics works. How much of this money I want to know, and I would ask the assistant U.S. attorney to investigate this. How much of the money that flowed illegally to these Somali shysters got recycled back into Democratic politics, into the Waltz campaign, into Ilhan Omar's campaign, into all these people's campaigns? That's how it works. And it's both sides. Republicans are big on the defense industry. Give money to Raytheon, Lockheed Martin. A certain amount of that comes back as political contributions back to these people in the politics. It's called the military industrial uh, congressional complex. Same thing. I think the fraud is so deep. And then this Waltz guy, was almost your VP, and he's running for governor again. I don't think he's going to get reelected. As this thing's just now like a boil that just got lanced. You haven't even seen the beginning of this. Tucker just did a recent interview with a guy. The other big area, another guy that's up in Maine, because this is another place where it's interesting. If you don't get it, I don't care what anybody says. I don't care what you call me. I've been right about this for 20 years, and I was called a racist, a xenophobe, and all these things, but I was right. These places were majority white, okay? Naive, like the Eloy, and they deposited these people in these countries for one reason, for political purposes, to put them on relief, to put them on the dole, to make them dependent on the Democratic Party and get them to vote for them. Okay, a dependent class. Okay, and to dilute the native population, and that's been the entire policy of the Democratic Party: replace the native population, both white and black, by the way. Okay, with all of these immigrants from all of these third world countries, low IQ, low trust societies, and this is what you get. You tell me, I'm going to sum this up with this. You tell me what net benefit bringing all these Somalis to the U.S. was. You can't do it. No way, shape, or form. 68 average IQ. No way. And I don't care if people are cringing right now or they're upset. Why would you say that? Because it's true. Where they came from is a failure. What, you think that when people just come here, they just kiss the ground and magically become, uh, you know, Jeffersonian Democrats? I mean, this is crazy, and this isn't the end of this. I think this is hilarious. I think it's hilarious, and I can't wait to see how much more of this is going on as it comes into to light. And this Waltz guy, if he gets reelected after all of this, and Ellison gets reelected, there's probably fraud even where they were getting money. They definitely knew about it. You can go on the Minnesota HHS Twitter account. They have one. They've had it for years. They've been walking about this. They've been sending letters to these to the administration for years. Nobody did anything. You're not going to tell me that some of that money. How did Ilhan Omar become worth $30 million since she's been in Congress when she came from a third world country with nothing? Okay, I'll stop. But this is endemic across the U.S. And you can call me any name you want. I'm just going to laugh at your face. But vote harder. Okay, guys. Merry Christmas. Happy Christmas. celebration of the birth of our Savior. I don't, Jesus Christ. I don't get into this commercialism, but if you do, however you celebrate the holidays, God bless you. And we'll probably see you. The next video will probably be in the new year. Have a happy Christmas, and we'll talk to you soon. Be on the lookout for that January issue of the AIA. I'm going to talk a lot about what I think is going to happen next year and what areas of the market are going to do well. All right, signing off. Talk to you next year.